All right, good afternoon and welcome back to Lunch of the Market. We're making a few speculative plays today on Children's Place, PLCE, and Rovi Corporation, ROVI. All right, first up, Children's Place. Stock is at a 52-week high, but it only trades with a PE of 16.3. Forward PE is only 15, and the stock has a squeaky clean balance sheet. It's got $170 million in cash and zero debt on the balance sheet. That amounts to about $6.56 per share in cash. If you back that out from the valuation, you're sitting at a PE of about 14.19. Tremendous valuation, impeccable balance sheet. This stock actually looks a lot like Gymboree, which was taken private in October, and being on the long side of this means that you'll have fellow shareholders like Karen Feinerman, who's an awfully smart lady and has been right on Children's Place for an awfully long time. John Najarian today talked about takeover chatter in the retailer name, and our way to play it is the March 2011 risk reversal. Okay, it's a 45-50 risk reversal. That means let's get out our handy dandy fingers. You're long the 50 call and short the 45 put against it in March of 2011. This structure cost us, let's see what it cost, $1.95. Yeah, $1.95. So we're long 50 calls and short the 45s against it. We basically get upside from 50 on, and I think the calls were about 3 something, and so we got back, I don't know, maybe $1.40 of that 3 something for the puts. Okay, so there's quite a lot of interest in the name right now. Obviously, being at the money, we had to pay a little bit more. We went out. So to finance that, we sold those 45 puts. Heck, at 45 puts, valuation becomes extremely cheap. With a stock down 10%, we don't mind owning it there for a longer term story. It doesn't pay a dividend, but we like the company nonetheless. All right, next bit of speculation is Rovi, symbol ROVI. This name is kind of like VMware, Riverbed, Akamai, but actually, when we take a look at the PEs of those names, VMware, Riverbed, Akamai, you're talking about PEs from 50 to 250. Okay, Rovi actually trades only with a 43 PE, and the forward PE for Rovi is only a 24. Heck, with a PE like 24, you're talking about Apple valuation. Apple trades right now at 21 and a half times trailing earnings. Okay, so with a forward PE in Rovi of about 24, it's really pretty appropriately priced, especially for the space. Okay, Rovi has as much cash on hand as it does debt. It's got about $562 million in cash, about $530 million in debt, but it generates $175 million in free cash flow on an annual basis. Okay, Rovi provides digital entertainment technology for the discovery and management of content. Provides interactive program guides that help viewers of content navigate, sort through, and select programming for viewing and recording. Yeah, think about like your DirecTV when you press the guide and the menus come up and you can sort through there and take a look at it, gives you descriptions, allows you to record it. Yeah, that kind of content interaction with the interactive menus, that's the kind of stuff that Rovi does. Okay, they just recently made an acquisition a day or two ago that's going to increase their product portfolio to offer. Obviously, this space is incredibly hot. It is the focus of a lot of growth investors and momentum players. So we didn't want to just outright get long the stock at a 52-week high, or just get outright the calls at a 52-week high. So what we did 2 things. January 2011, 60, 55 put spreads. We sold those. Okay, stock's trading at $60.22 right now. We sold the 60, 55 put spreads. We're talking only about 22 cents worth of cushion right here. Okay, but with the stock up 3.5% today, there's some volatility there that's going to come out the closer we get to options expiration. And if all these buyers are right, then the stock will actually be above $60 by options expiration, and we'll be profitable. Okay, as long as we stay above $60 and a penny, we don't have to worry about the put spreads, but we do have to worry about those call spreads that we're long. Okay, so we're long the 60 calls in January, and we're short the 60, 55 put spreads. This structure only costs us 55 cents. So our break even is with Rovi at $60.55. It's at $60.37 right now. We don't need the stock to move it tremendously to break even. and then we'll manage the trade from there depending on what happens in the story. Okay, now you may even be able to pay 45 or 50 cents for the trade. It cost us 55 cents to put it on, but there was more volatility earlier this morning. You may be able to pay less now. Okay, the second trade that we like, because we're not usually big fans of being that far out. So the other trade that we like is to go all the way out to July of 2011, okay, and do the same structure. So if you go all the way out to July of 2011, you can put on the same trade where you're long the 60 call and short the 60-55 put spread against it. We did 3 times as many short put spreads as we did calls, and that allows us to put on the trade for a credit. Although we've been trying to put on the trade for a credit now for probably about 20 minutes and have been unsuccessful. So we're probably going to see if we can just put it on for flat, meaning we don't pay anything, nobody gives us any money, we just have the position. And then obviously we're going to need upside to be profitable, and of course we're short the put spreads. But it's out in July of 2011. Again, the forward PE of Rovi is only 24. So if the stock trades back up to a multiple around where it trades right now, the stock's going to be tremendously higher from here. And obviously a nice play would be someone like a DirecTV or a Time Warner Cable or somebody else to actually purchase this company, make it a nice little tuck-in acquisition, kind of vertically integrate it, and then offer those services to other content providers. So we'll see. There's a lot of M&A in the space, or a lot of M&A chatter in the space. Certainly Hewlett-Packard, Dell, those guys have gone out and bought companies in this kind of making the internet faster, better, easier to use space. So we like it. Heck, it'd be really nice to see someone like an Akamai pick up a Rovi, but it's probably not likely. Okay, so right now we've got in January and in July 2011, right, we're short the 60-55 put spread, and we're long the 60 call against it. Okay, so same strike here, 60. We're short a put spread here, long a call here. Try to do it for obviously as little as you can. Then you only need the stock to move the amount that you paid for that structure in order to break even. Everything else above that is a gain, and of course there should be a gain on the put spreads. There will be a gain on the put spreads if the stock trades up and your call is in the money. All right, thanks for joining us today on Speculative Wednesday for our trades on ROVI and PLCE. We also finally bought those VIX 18-21 call spreads for February. We paid $1.65 for them. So the VIX actually came down a little bit and allowed us to purchase that without paying too much for it. So not only are we putting on speculative trades, but we also are putting on our hedges and selling some stock here. We did sell some stock this morning and raise some cash. Make sure you're hedged. Make sure you've got some cash. There's arguments on both sides of the fence for whether or not we're going to see a January correction, so make sure you're protected. Thanks again for tuning in again today. Have a great day, and we'll see you tomorrow.